home prices in San Antonio are going to drop by about 10% in 2024. Well, that's according to an article that I'm going to be sharing with you here in just a moment. And I'm also going to be sharing some historical data as well as my thoughts and opinions on why that may not be the case. And we're going to get after it right now. Hey y'all, if you're brand new to the channel and you want to know everything there is about living in San Antonio, Texas, then make sure to hit that subscribe button and tap that bell icon so that you'll be the first to learn about the current market right here in San Antonio, Texas. My name is Brock and I get phone calls, texts, and emails all of the time from folks just like you who are looking to make their move to San Antonio. And I just love when that happens. So if you are looking to move in the next 7 days, or maybe it's in the next 70 days, please do not hesitate to give me a phone call, shoot me over a text message, send me an email, or if you want to get face-to-face on a Zoom call, I would love to do that as well. All of my contact information is down below in the description for you, and I can't wait to help you make a smooth move to San Antonio, Texas. Now today, again, we are going to be taking a look into an article and going into a deep dive of some of the information that they shared. This article states that the home prices across San Antonio, as well as Austin, Dallas, and even Houston, are going to be dropping pretty significantly next year, as well as the interest rates. We're also going to be going over the San Antonio market that's happened historically and what is currently happening, and I'm going to just be sharing my general thoughts and opinions along the way on all of those things. And I really don't agree with this article, but let's go ahead and take a look at it. Now, this article here is titled 4 Texas Cities Where Home Prices Are Expected to Fall in 2024. And as we take a look at this report here, it's actually published from a report by an economist that works for Realtor.com. And they did a bunch of analysis and stuff. And basically, they predict that home prices across the country are going to be dropping about 1.7% next year, right? That's not a significant decrease, but they kind of broke it down by different areas and different markets. And the number one spot on this list goes to Austin, right? This economist stated that they believe there's going to be about a 12.2% drop in home prices in Austin. And honestly, this one doesn't really surprise me too much because the city of Austin really saw a big boom and they really had a lot of growth when it comes to the home prices up there. I believe the last time I looked, which was about a month ago, the median price of a home in Austin was about $660,000. And comparing that to San Antonio, we're at about half, and we're about $335,000 for a median price in San Antonio. And they're only about 60 to 65 miles up the highway from San Antonio. So they're really not that much further away, but they have a lot more density when it comes to the population and housing up there. And there's a lot less supply of homes up there compared to San Antonio. So here's a full list that was published by that economist from Realtor.com. Again, Austin landed in the number 1 spot, but we're going to be concerned and taking a look into San Antonio, right? So this economist predicts about a 9.4% decrease in the prices of homes in San Antonio next year, which to me, I don't think that's going to happen. And I'm going to be sharing here in just a moment exactly what's happened and why I don't think that's going to be happening in the future, right? I think maybe a little bit of price stabilization, but I don't think we're going to see a nearly 10% decrease in the prices of homes in San Antonio. But other notable Texas cities, Dallas ended in the number 5 spot, and then Houston is a little bit further down at about 4.5% loss in the price, right? And so scrolling down here a little bit into this article, they say that, according to the National Association of Realtors, the typical price of a home in America skyrocketed to $410,000 in June, which was the second highest recorded in 24 years. Now, in October of this year, they said that the median price dropped down to just over $379,000, but it's still 40% higher than in October of 2019. Now, of course, October of 2019 is right before COVID hit, only about 5-6 months there. So that was a record high at the time, but we're still much higher than October of 2019. And this just kind of goes to show you that regardless, the price of a home generally appreciates over time. And this stat right here just kind of helps, cement that fact in. And then if we scroll down a little bit more into this article, this last sentence here is that this article, or this economist from the National Association of Realtors, believes that interest rates will fall between 6 and 7% by the spring. So that's good news. If you think that the 7% is a little too high right now, this economist believes that they're going to drop a little bit. And I really, truly hope that these interest rates drop a little bit to give everybody some relief and, really help those families and individuals that are wanting to buy a house, but they're just priced out because these interest rates are just too dang high. But while we're talking about interest rates, let's go ahead and take a look at them. This is a website that I like to use. It's called mortgagenewsdaily.com, and they really kind of keep a track on, mortgage interest rates on a daily basis, as well as different news and events that would affect interest rates. So this is a good resource that I like to look at. As you can see, as of today, December 5th, the 30-year fixed rate is at about 7.08%, which is much further down than the 8% that we saw in October. And speaking of that 8% interest rate, that is the highest recorded interest rates that we've seen since 2000. So in 23 years, we've never seen an interest rate above 8%, but in October of this year, we definitely hit that and went a little bit higher than that. So it's good to see that they've come down almost over a full percent in, the month and a half since we've hit those high interest rates. But let's take a look at this chart right here. I've already expanded it, and I wanted to share this with you. So we're kind of starting to look at 2018 all the way up until today. And you can see right here back in October of 2018, which that news article shows that we were still 40% higher than homes at that time. The interest rates were at 5% or so at that time. And they steadily decreased to about 3.75% until COVID hit. And we can see right here in April, they hit 3.5%, 3.25%, depending on the numbers you look at. So rates dropped pretty drastically. At this time, the world was shutting down, the economy was very unknown, and no one knew what was going to happen. So the feds decided to lower the interest rate to 0. And so when this interest rate dropped to 0 at this point, it made it really cheap for a lot of people to be able to go out and purchase a home at a really low interest rate. And we can kind of see here that interest rate stayed at 3% all the way down to 2.75%. And before, going back up, at this time. And right here in about August of 2022, so last fall, the interest rates really shot up to about 7%, and it really kind of put a damper on the housing market. If you were trying to buy a house last fall, you could really see that interest rates were high. A lot of people were scared of the 7% interest rates because we had been used to the 3 and 4% interest rates only about 12 months prior. And so it really put a slowdown on the real estate market. But as people got used to the 7%, they actually came back down a little bit. And then over the last 6 months from the time of this video, so the last half, last 2/3 of 2023, inflation has been pretty bad. And so the Federal Reserve has been slowly raising the interest rates. And that's what you can see here in this graph now. So as the feds raise the interest rates, month over month, meeting after meeting, the cost to borrow money on a mortgage increased slowly until we hit that 8% in October of this year. And they've actually come down since then. So it's very good to see that interest rates have dropped from the 8% down back to a 7%. Of course, it's still not the 3 and 4%, the 2% that people were seeing, but it's much better than 8%. Now, taking a look at the average sales price of a home in San Antonio, we can see again back in here in 2018 when interest rates were around 5%. We're about $242,000 all the way up to $268,000, and it relatively stayed around $255,000 to $265,000 as the interest rates stayed around 5%, dropped down to 4%. So as we go this way and look at this inflection point right here, this is April of 2020. At this point, the world is shutting down. A lot of unknown is happening. The Federal Reserve has reduced the rates to 0, right? So if we go, April 2020, let's go take a look at our chart here. So we can see there's April right there. So April of 2020, they were at 3.5%. And then at the end of April, they're at 3.25% still to 3.5%. So interest rates are the lowest we've seen since, the 5% interest rate back here and, a year prior, 2 years prior rather. So that spurred a lot of people, again, like I mentioned already, to go out and buy a house. A lot of people, working from home, so they needed a home office. Maybe their spouse was also working from home now, so they needed more space to be able to work from home in their own areas. And with just interest rates being low, even if people didn't need more space, they were able to afford more home at a lower price per month on their mortgage payments because the interest rates were so low. So it spurred a lot of people to go out there and start buying homes. And as everyone knows, it caused a frenzy. Now, with this frenzy, of course, we saw a lot of homes selling really fast. We got used to seeing homes sell in like 2 to 3 days, and with multiple offers, 10 to 20,000, if not more, over the list price, depending on the competition. Folks were just going crazy, doing wild things such as waiving the appraisal amounts and willing to waive inspections and not really understand what they were getting themselves into when it comes to the home and the condition of that home. And so prices continued to increase as the interest rates were low, and we can see this here in the graph. I mean, April of 2020, it was at $270,000 was the average price of a home sold in the San Antonio area. And right here at the peak, this is June of 2022, it went all the way up to $394,000. So that is, $120,000 difference in average home sales price that happened in a little over 2 years. So that is crazy to see. That appreciation, that price growth is not normal to see. And now, even though it's not normal to see, we can kind of, let's take a look at this here, and it's the month supply, right? So here's April 2020 again, it's at 3.3 months. It's that inflection point. Of course, again, the world was shutting down, so folks weren't sure what was going to happen. People didn't want to sell their homes because they weren't sure what was going to happen. So the month supply of homes, right, the amount of homes available for sale drastically decreased over the next year. And as prices started going up, we started to see more sellers into the market because they wanted to take advantage of those high prices, right? So let's look at June of 2022, right? So we can see here at the peak of those prices that we just saw on the previous graph, we can see here that the inventory levels were up quite a bit from the lows that they were, and it continued to increase as more and more sellers were wanting to take advantage of the higher prices that were there in the market. So as these homeowners were deciding to take advantage of the higher prices out there while rates were going up, eventually the rates went so high and a lot of folks decided not to buy because the interest rates were at 7% instead of, the 4% that we saw before. So as we can see, the month supply of homes has been slowly increasing over the last several months to a year, and that is really good to see as we're starting to get more and more homes available for sale. Now with this though, the days on market is also increasing, right? So as we can see, the days on market, which was the time it took for a house to sell, got to really low. It got to 31 days, which is incredibly low. Right here as COVID was about to hit, this is February 2020, we can see that it was about 82 days to sell a house, and then it drastically dropped down to 31 days on average. Now, of course, some homes sold a lot faster than 31 days, and others took longer than 31 days here to sell. But you can see that as more homes have come to market, it has taken longer and longer to sell some of these homes. And even today, we're sitting at about 74 days on the market on average, which is much closer to a normal market to see. Now, let's go take a look at the sales price today, because I didn't touch on that a minute ago, right? So here in June of 2022, let's check on the interest rates. What was happening with those in June of 2022? Well, here in June of 2022, we can see that interest rates hit 5.5%. That was the highest they hit in quite a while. People weren't wanting to pay those interest rates, but they kept continuing up to 7.25% and then all the way up to 8% there. So where was I going with this? Well, this is the point where people were like really nervous about these higher interest rates and the high prices of homes. A lot of people were like, well, I'm having a high interest rate and the prices are at all-time highs, so we do not want to buy a house. And so homes started to sit longer on the market. And as these interest rates started to rise, homeowners were sitting longer than the 30 days or the 2 days that they were used to. And so to compensate and try to help buyers out, they were dropping the prices of their homes. Builders were offering some incentives. And even today, you can kind of see that it's been relatively flat. But even when these interest rates hit 8% in October, the home price fell to $367,000. And as they've come back down to 7%, more people have started to enter the market again and buy these houses, and causing the prices of homes to go back up to about $375,000 today. So now I want to take a look at this article by CNBC. And it really kind of just drives something home that the prices kept rising even as the mortgage rates surged. And as we look through this article here too, it points out the fact that, across the nation, home prices went up 3.9% higher in September compared to the month prior to this, which was still up 2.5% year over year in August. So even though the interest rates were going up, so were the prices of these homes. And it points out a few cities here, so I'm not going to touch on that here. And then down here, further down in the article, it says year to date, home prices have risen 6.1%, which is much more than the median full calendar year increase in more than 35 years of the index data, meaning that the home prices rose significantly more than most other increases that they've seen over the last 35 years. And even though these interest rates are high, people are still purchasing these homes at a higher average price. And this quote right here is pretty interesting as well. It says, unless higher rates or exogenous events lead to a general economic weakness, the breadth and strength of this month's report are consistent with an optimistic view of future results. So with that, this is basically saying that unless something significant happens with the economy or the general world as a whole, or higher rates continue, then they don't really think that the prices of homes are going to fall. So I also want to point out this article here by the Texas A&M University, the Texas Real Estate Research Center. There's a group of folks over at Texas A&M University in College Station that really keeps track of the Texas real estate market as a whole, and they really do a fantastic job at breaking down Texas real estate as well as factors that are affecting it. So one thing I wanted to point out here is that the record rates push down loan applications. This section talks about the higher interest rates pushing down loan applications, which is an indicator of the number of folks who are actively trying to purchase a home. A lot of people will like to look at homes for sale, but until they make a mortgage application, that doesn't really become too serious, because if you're applying for a mortgage, you're more than likely in the market to purchase a house. But it really just shows that the interest rates have affected the number of people are going out there to purchase a home. Also, this section here is talking about the construction for single family homes, how the permits have fallen quite a bit, and so that is just a slowdown in the general construction of new homes. And there's only so many existing homes that are out there that are able to support the growth of San Antonio. And I know this section here is talking about other areas of Texas as well, but in San Antonio, we are experiencing a lot of growth, and with new construction permits slowing down overall, you can see that the housing demand is higher than the housing availability. And so that really kind of just helps to allude to the higher prices as well. And you can see this section here specifically talks about the lower supply of homes keeping those home prices up. And because, the fact that there is not enough homes available, they are actually not keeping pace with what they need to be. We're actually in a housing shortage right now across this city of San Antonio, with the number of people that are moving here on a regular basis. And so one last time, let's just take a look at the local San Antonio market. Again, the current average price of a house is, $375,698. We're looking at the number of homes for sale here. We can see that there's currently about 12,721 homes for sale, which is the highest it's been in quite a while. And that's just interesting to see, especially with the data we just looked at and saying that there's a housing shortage. But let's see the month's supply for San Antonio. We're sitting at the highest we've seen in quite a while at 4.6 months now. Looking at this number 4.6, this is telling us, right, if no more homes come to market at the current pace that we're selling homes, we will sell out of all of the homes available for sale in 4.6 months. So that is good to see. By definition, this is still a seller's market, meaning that sellers typically have the upper hand and there's more competition among the buyers out there. A neutral market is anywhere between 5 and 7 months, and anything above 7 months worth of inventory is a buyer's market. So even though right now we are by definition and by numbers in a seller's market, a lot of buyers are experiencing some fantastic deals out there, and I really believe that buyers really are at a great time to buy. So what does this mean for you? Well, I know we went over a ton of information, so thank you for sticking around, but in my humble opinion, I don't think the prices of homes are going to drop 9.4% next year. I do think maybe we'll see a slight decrease in the prices of homes, as we're still in the slow period of the year. At the time of this video, we are in December and we're getting closer to the Christmas holiday and the new year. So right now is just a naturally slow time for the real estate market. So there's not as many homes being sold, but there is still a lot of homes out there available for sale. For instance, a lot of the builders have a ton of inventory on their books and they are ready to move them. So they are giving some amazing deals out there to buyers. And I'm talking like, I helped a family get $60,000 off the purchase price. The builder also bought down their interest rate and covered their closing costs up to $10,000. So these folks walked into this house without hardly having to put anything into it, and they got an amazing deal on a brand new house. And it's only happening on the ones that are 100% done with completion or very close to it, because these builders have a lot of homes available. So if you are in the market for a new construction house, please feel free to check out a lot of the other videos on my channel. I've got a ton of home tours out there about various neighborhoods and builders and various price points all over San Antonio in the surrounding area, so please go check out those videos. But if you want some of the latest and greatest information on pricing and incentives, please go ahead and reach out to me. Again, all my contact information is down below in the description for you. But back to the prices, I don't think they're going to drop significantly. Honestly, I believe that the interest rates are going to be dropping next year. I don't know when, I don't know by how much, unfortunately. I do not have that crystal ball for us, but I wish I did. So I think these interest rates are going to drop below 7%. I hope they get down to like the low 6s or maybe even the high 5s. And even if they drop below 7%, I really think that's going to spur a lot of new buyers to enter the market. And when all of these buyers decide to come back into the market, I really think that's going to start driving competition and driving the prices back up again. I mean, we're already seeing the prices at the 375 mark, which is pretty high compared to what we've seen over the last 24 and even 18 months here in San Antonio. With more people out there and competition, we might see some crazy things again, like multiple offers, people bidding over list price, and maybe even we'll see some competition when it comes to waiving appraisals and inspections. So I really think it could be a repeat of the craziness that we saw in 2021 and 2022. So if you are in a position to be able to buy now, there is hardly any competition among buyers out there. In fact, I've been getting calls from agents who are, selling homes for their clients, and they're like, "Hey Brock, we want to make a deal. Please, we can drop the price, we can do this." And sometimes my folks aren't interested in these homes, but these sellers are desperate and they're ready to get their home sold, both on the existing home and the new construction side. But I really do think the better deals are on the new construction side, because these builders aren't tied to their money like homeowners are, and so they're giving even better deals to help buy down the interest rates, come down on price, cover closing costs, and all sorts of amazing things. So with that is all my humble opinion, but I would love to hear your thoughts and opinions down below. Do you think the interest rates are going to fall? Do you think the prices of homes are going to continue to rise or continue to drop? Please let me know down in the comments what you think about this video. And if you are looking to make your move to San Antonio, please do not hesitate to reach out to me. I would love to help you and your family make a smooth move to San Antonio. So go ahead and send me a text message, give me a phone call, send me an email, or if you want to get face-to-face on a Zoom call, you can set that up as well. Again, all of my contact information is down below in the description for you. And I can't wait to get in touch with you and help you make that smooth move to San Antonio. So with that, thank you one last time. If you haven't already, please go ahead and subscribe to the channel and hit that bell icon so that you'll be the first to learn about the current market here in San Antonio. And I will talk to you soon. I hope you have an incredible day.